Investors, if you're in your 50s or 60s, you've seen bull markets, bear markets, and everything in between. And if there's one thing you know by now, it's that the media loves a good doom and gloom story. Let's be real. The market is still strong, and history tells us that betting against it, not a great move. Right now, the S&P 500 is sitting near all-time highs, 6114. If you're sitting on the sidelines waiting for some massive crash, you might be waiting a while. Here's why. First off, price is truth. Markets don't care about emotions, they move on money. Second, history does tend to repeat itself. Bull markets thrive on uncertainty, and this one's still climbing. Third, shorting all-time highs, that's a risky move. That's Steve Cohen's #1 rules. Never short a new high. So, what's really keeping this rally going? Earnings are holding up, even with higher rates. You'd think higher interest rates and a strong dollar would crush corporate profits, right? Wrong. 77% of companies beat estimates in this quarter, and what started as an 8% earnings growth is now tracking closer to positive 13. The dollar is peaking, and that's actually great news. A weaker dollar boosts earnings, especially for companies that make money overseas. International markets are surging. China's up double digits, Europe hitting new highs, and US tech, well, it's lagging for now. Most investors are bearish, and that's bullish. Here's the thing. A lot of people are betting against the market. Bearish sentiment just spiked to 47%, way above normal levels. And historically, when too many people are bearish, stocks tend to rally. Bond volatility is dropping, which means hedge funds can take on more risk, pushing stocks even higher. So, investors, what's next? Yes, it's February. It's historically a choppy month, but guess what? It's also one of the best buying opportunities before a multi-month rally. Since 1950, bull markets with setups like this have only corrected 13% of the time. Investors, we're in a bull market, and history says fighting it is a losing game. Bottom line, stay smart, stay invested, and if you're waiting for the perfect entry, you might miss the run. If you panic because of the media, you might sell at the worst time. Markets reward patience and discipline, not fear. The data says stay bullish. Drop a comment below. Are you staying long or still waiting? Subscribe for our weekly updates. We track the markets so you don't have to. Until next week, stay smart, stay invested, and keep running with the bulls.